Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview series. We want to get an update from one of the top miners in the world, Sibanye-Stillwater out of South Africa. And I have here with me now James Wellsted, the Executive Vice President of Investor Relations and Corporate Affairs. James, good morning to South Africa. How are you?
Morning, Jochen. Very well here, thank you. It's going into summer, so things are looking a little bit better at the moment. Yeah.
Yeah, much better for you weather-wise. I mean, weather-wise, it was not an easy time for the company. For sure, last year was not easy already, but also you have just published last week your half-year numbers, which were, I wouldn't say a real market shock because they were expected much worse. But I think also there is here a light of the end of the tunnel. So maybe you want to comment a bit in general onto it, and then let's go into detail.
Yeah, listen, I think the environment's still very challenging, and you can see it with commodity prices globally. Most other than gold and a couple of, zinc and a couple of others, most commodity prices are at multi-year lows. And clearly there's a lot of economic uncertainty. Uh, Interestingly, the US cut rates by 50 basis points last night, which we think is quite positive. But China is still struggling. So there's a lot of uncertainty, questions around a soft landing or a hard landing in the US. And as a result, metal prices have stayed very low for a long time. And for us, particularly PGMs or platinum group metals, which were 80 plus percent of our income have been and cash flow for the last couple of years. The prices collapsed from levels of 60,000 Rand, and I'll talk about in Rand, per ounce that we were receiving for a basket of PGMs down to 24. So they've, a third of what they were, and that's put a lot of pressure on the industry. So we realized that this was going to be an issue, that our earnings were going to be under a lot of pressure and our cash flow. And already in the beginning of last year, we started to take quite decisive action to try and prepare ourselves for a longer bottom of the cycle of low price environment. Uh, and we'll get to maybe our outlook for the metals, but we're still confident on the outlook for the metals that we produce. That hasn't changed. We think this is just a normal cycle and we're going through a temporary phase. But what we need to do as responsible managers of a company is to make sure that we can get through this and ensure that we are in a financially secure position, that we can endure a long period of low prices and then hopefully come out and add a lot of value on the other side.
Mhm.
So what we did is we first of all have focused on restructuring our operations, and taking out high cost production, making sure that we're not losing a lot of cash flow. There's not a lot of cash outflow, and that's been going on since the beginning of last year. And we've basically uh, closed, two platinum mines in South Africa, restructured another two. We've closed some gold mines, and now we're on the third phase of restructuring of our US PGM operations in Montana. And we'll also be restructuring our nickel facility in France at the end of this year. So there's been a lot of work, and we've taken out a lot of costs, and we're starting to see that come through in our results. And I think the second half results, and certainly 2025, we're expecting much more positive results, and minimal cash outflow other than investing in the project, the Keliber project. We also have focused on making sure that our debt or our balance sheet is robust. There was a lot of concern in the market that, with the cash that they were projecting us losing, that we would breach our covenants, our debt covenants, and have to do a discounted rights issue. Now, we obviously were aware of that risk, and we had taken the steps I've already spoken about at the operations to minimize cash outflow. And then we've been quite proactive with the balance sheet, and we've done a series of financial transactions which have resulted in us strengthening the balance sheet. And we got another couple of streams that we look at, which will mean that we will have added about $2.1 billion of value to our
Mhm.
balance sheet and given us additional liquidity and headroom, which is more than enough to see us through an
Mhm.
extended period of low prices. So I
Okay.
think we're in a much more stable and very secure
Mhm.
position now.
Okay, super. Yeah, I got also questions from shareholders which were a little bit, yeah, let's say concerned about the debt level, that you are putting maybe too much debt onto the balance sheet. But to me, I don't see that really, because with the
Mm.
streams and stuff, this is not debt, right?
Yeah.
But you have enlarged your your rent credit facility, and I think you did something with convertible, right?
Mm. So I think the expectation was because of the analysts looking at our December 2023 half year results, where we had quite a lot of cash outflow. We were still in the middle of the restructuring and we hadn't started to see the benefits coming through. And a lot of them just projected those losses forward. And obviously that meant that they projected a huge increase in debt and that we would breach our covenants, if not
Mhm.
by the end of the year in early 2025. Now, actually, at 30 June, our net debt to adjusted EBITDA was 1.43 times, which is
Mhm.
well below our debt covenants of 2.5 times. So,
Mhm.
clearly the analysts were too negative on that side. But what we have done is increase those debt covenants to 3.5 times, which again gives us significant upside before
Mhm.
there's any risk to us breaching any debt covenants. And what we focused on is not actually adding more debt or raising equity capital, which would be dilutive. What we've done is try to look at alternative financing through, for instance, in August, we raised 1.8 billion or $100 million through a gold prepay. So
Mhm.
effectively, what we did there is we sold gold forward for 36 months. We get $100 million up front, but we still participate in the upside in the gold price,
Mhm.
38% above where that floor was set. So
Mhm.
it's quite a smart transaction at a time when the gold price is relatively high compared to other commodities. And
Mhm.
we're looking at doing more of those kind of prepays on chrome, gold,
Mhm.
and doing some streams as well.
Mhm.
So
Okay,
that
super.
doesn't affect our debt. That's all non-debt
Yeah,
finance.
exactly. Okay, super. So we are here on the safe side. Also, I saw you reported a loss in the group of 379 million US dollars, but you had also an impairment charge of 407 million
Mm.
dollars. So that looks to me like that you were, without the impairment charge, you would have been positive.
Yeah, I mean, as you're aware, the PGM prices have dropped very rapidly since
Mhm.
2022, and particularly in 2023. So at the end of last year, we actually and basically we have to run fair value calculations on all of our operating assets. And obviously, with the palladium price coming down to below 1,000, our US PGM operations, which are primarily palladium producers or produce palladium mainly,
Mhm.
that resulted in an impairment in at the end of 2023. And then what's happened over the course of the years that the palladium price has actually dipped below $1,000 per
Mhm.
ounce, and consensus prices in the market have come down as well. And we use consensus for our fair value calculations. So it was about 5% and 8% in the long term that lower palladium price forecasts than what we used in February. And as a result, we had another impairment. But it's non-cash.
Mhm.
It's not a real impact on the balance sheets or anything like that. And if the prices turn, in theory, we'll be able to write some of that value back onto the asset.
Okay. Prices turn, that would be one of the big questions, of course, for you guys. I mean, platinum, palladium prices, if they rise by 10-20%, that would help you a lot. So what is your expectation as a company? What are you seeing for 2025, let's say?
So we've had the same view on a fundamental base. I mean, there might be minor shifts over the last couple of years. There are things that have changed, but we've been quite positive about the outlook for PGMs. At one point, 2022, when battery electric vehicle growth, mainly from China, was really, really accelerating. You would have seen in the media that everybody wrote off internal combustion engine vehicles. Battery was the only way to go, etc. And we always said that the kind of projected growth rates or penetration rates that the market was assuming and the media was assuming was impossible to achieve for various reasons, but one being where would you get the lithium and the other battery metals to supply them? Because it's much harder to bring new mines online and new
Oh yeah.
production and new supply online than to just forecast 22% compound annual growth in battery electric vehicles. So we always thought that that was too optimistic and it would slow down, and that would create more demand for PGMs over the medium term, and then
Hmm.
longer term, the hydrogen economy. As it's turned out, we have seen a slowdown in BEV growth this year, as you're aware, and there's been a shift towards hybrids, which use battery and auto and catalysts. They've also got internal combustion engines, which is positive for PGMs again. And we think that that's going to continue for a while. There's some other positives in that from the supply side. We've closed some mines. There's going to be more closure of operations, more supply, more projects being deferred, and supply expectations are gradually starting to come off. Recycling supply, which many people expected to be at 15% growth per year over the last 2 years, has actually been negative. So that's a lot of supply that hasn't actually come through to the market that was expected to. And what we're seeing with the slower BEV growth is more demand for internal combustion, more demand for hybrids, which will mean that we're going to have a longer period of stronger demand for PGMs, and obviously with lower supply, that's a good place to be for a PGM producer. But we're also positive on battery metals. We are investing in our Keliber projects in Finland.
Would be my next
The,
question. Yeah.
yeah, two reasons is that even with that slower growth or penetration of battery electric vehicles into the global auto sector, the growth is continuing. And as you would have seen, lithium prices right now are at around $10,000 per ton. In fact, Cattle, one of the biggest battery makers in China, just shut its biggest mine, which is about 6% or 5% of global lithium supply. And at these prices, there's no incentive to bring on new production. So we kind of taking a bit of a counter-cyclical and I guess contrary approach. We're funding quite a lot of capital, and that's been part of the reason the market's been a bit concerned about our debt. Funding a lot of capital to bring the Keliber project online by 2026, 2025, 2026, when we think that there will be deficits in the lithium market, and particularly in Europe, where Europe is pushing back against Chinese
Hmm.
battery electric vehicles flooding their market. We'll be in a very strong position to deliver European mined and refined lithium hydroxide into the European auto sector. So we
Hmm.
think we're in a very solid position. We've taken a bit of a different view and been criticized a bit for it, but I think it's starting to come out the way we saw it.
Mhm. No, I think this is really the right way because I was discussing it in a previous interview about nickel. I think important is also with the Caliber project. You are in Finland, you are ESG wise on the top, of course.
Mm,
So that means supply chain wise, you are fulfilling all the laws in
mm,
Europe. So everything is fine, yeah, because now the big companies have to prove from where is it coming.
mm.
Is it ESG correct, United Nations, etc., etc. Yeah, and I think this is your big advantage. It's like in front of their door in Europe, so
Yes.
that is fantastic.
And
And
obviously Finland's got very green energy that
yep.
so it's not coal fired or whatever. The distance
Mm,
between Finland to the mainland of Europe is very short. So you're not shipping the stuff from Australia or Chile
yeah,
long distance, which
exactly.
adds to its carbon footprint. And obviously it's local supply. So yes, we purposefully position ourselves in Europe and in North
Hmm.
America so that
Hmm.
we could benefit from this kind of change in the global trade from global to more
Hmm.
east-west and more multipolar in
Hmm.
nature.
Yeah, absolutely. So let's stay in Europe with Sondeville. You said you want to change something here, that you want to do a PCAM in the future here. So what has changed to the nickel, yeah, let's say refinery status? Also, what is going on with battery recycling? Because I thought
Mm.
this is also something big you wanted to do, right?
Yeah, yes, we did. And initially, when we bought Sandoval in 2021, the intention was actually, get the nickel refinery
Hmm.
back to break even. I mean, it was making losses under Eramet, but there was a plan to build up production, get it to break even. And we were then going to use that facility in that area, which is very well located in Le Havre, to build at the time we were looking at nickel sulfate production and battery recycling. We've done studies over the last 2 years. It's too early for battery recycling because
Hmm.
there's just not enough critical mass and enough
Hmm.
volumes that'll make it commercial. And while we were doing the nickel sulfate study, we picked up, or our hydrometallurgists picked up this idea to rather go to PCAM, which is a step further than nickel sulfate. It's actually a precursor cathode active material that goes directly into the battery. So at the current Sandoval refinery, because of the structural change in the nickel market with Indonesia and high pressure acid leaching technology, allowing them to flood the market with cost or low cost nickel,
Hmm.
that's depressed prices. And we've had energy prices going up because of the Ukraine conflict, and Sandoval's been making losses. So what we've decided is to rather see if we can convert that facility to PCAM production. And we've currently got a feasibility study called Gallicam, which is looking at that.
Hmm.
So by the end of the year, we'll know what the next steps will be with
Hmm.
Sandoval. But we're going to stop producing nickel metal from that
Hmm.
facility.
Okay, good. But also with the battery recycling, this is still, let's say, in the making. But as we
Yes,
both know, it is too early because you need much, much more old batteries to be recycled, right?
correct.
But you have the
And
technology,
yeah, well,
theoretically.
what we're trying to do is trying to connect ourselves with the entire value chain, battery value chain in France, particularly from Sandoval, but in Europe overall. So the idea is at first we would produce PCAM from MHP, which is produced in Indonesia, New Caledonia, etc.
Hmm.
And then over time, when we get enough, and it would maybe be a circle from the gigafactories, the black mass that they produce would then get recycled, and we'd use that to produce the PCAM and deliver again.
Hmm.
So you get a closed loop environment, which is very, environmentally friendly, etc., and circular economy.
Hmm. Okay, super. Let's stay 1 second also with recycling. Let's move to the US to Relden because you bought that company. I think that was a very wise investment decision, to be honest, because I think recycling is definitely the future in combination with mining, because we need to use the metals which are already, yeah, let's say produced and in the products we have in this world. But recycling must be a key component because we are getting more and more people in this world, and yeah, mining is not something where you press the button and then you have it, right?
Yeah, and we've actually identified three components. So we call the recycling urban mining. Obviously, your primary mining, which is your underground and surface mines. And then the other element of our business is the secondary mining, which is the dump reprocessing, the tailings reprocessing. So, from the legacy mining of the past, what used to happen is the waste rock would be put onto tailings facilities or rock dumps, but it contains traces of metal as well because
Hmm.
of the technologies were not as good in those days. So we are able to go in and reprocess those tailings facilities, extract value, and
Hmm.
then deposit them in a much more modern tailings facilities
Hmm.
that are more environmentally friendly and less of a risk to the environment. So there's a very nice story around that. And we own 50% of DRD Gold in South Africa, which is the biggest gold tailings reprocess in the world and has been going for 100 years. And then we bought Century in
Hmm.
Australia, which is processing zinc tailings at the moment. So that's one component, and then we had recycling at our US PGM operations. We were one of the
Hmm.
biggest PGM auto catalyst recyclers in North America. And we've recently bought Reldan, which is, it's not AutoCAD specifically, but it processes industrial and
Hmm.
electronic waste. So cell phones, iPads, etc., and
Laptops,
extracts
whatever.
precious metals, silver, gold, PGMs, copper, nickel, etc. So a variety of metals, and they've just started to expand into India. They've got a partnership in India. They've got a presence in Mexico, which is another big opportunity. So we see a lot of opportunity to really grow our recycling business. And as you say, I mean, over time, more metal is going to have to be recycled because
Hmm.
it's getting harder and harder to start and get permission to
Yep.
start up new mines.
Absolutely. Let's move to South Africa because I just checked the gold price. We are almost at 2,600 US dollars per ounce again. So I could imagine that helps you a lot down there. So what is the status for South African gold production? I think with the unions, you are fine for the next 2 or 3 years. And so from that perspective, how do you see the gold business in South Africa and what can we expect?
So the gold business in South Africa's had a very difficult 5 years or so. You know, we went from strikes in
Mhm.
2019, COVID, where everything was shut down. Came out of COVID again. We had more strikes in 2021, but we're starting to get them back to stability again, stable operations. Um, what we did last year, though, because they are quite mature operations, I mean, we inherited them from Goldfields in 2013 with only 8 years life. And we've already been mining them for 11 years, and we've still
Mhm.
got 8 to 10 years life, but they are in a mature phase of their life. So we have to continue managing it, and we have
Mhm.
restructured those operations quite extensively because they are relatively high cost compared to the global cost curve. And we are now getting to a point where we are now benefiting and able to get that operate leverage to the higher gold prices. So
Mhm.
we think, the first half of the year they made positive EBITDA, but cash flow was negative. But we're pretty confident that as we get to the end of this year and into 2025, we'll be able to generate quite substantial cash flows from stable operations with a high cost units having been restructured.
Mhm. Okay. And also in South Africa, I love my uranium question,
Yes.
as I see it, the big joker. How is it going with your study? I think you are in a study to maybe restart uranium production. To me, it looks like after I had several talks in the last weeks after the World Nuclear Association meeting, I must say, it looks to me like that we are very close of a real move in the
Mm.
uranium market because the contracting is really going, yeah, is coming to an end. So the utilities have to do a lot new contracts and need a lot more uranium here in the future. And I could imagine that you probably could really benefit with your 60, 80 million pounds of reserves you have in the tailings, right?
Mm. Yeah, certainly. And, we do believe that the uranium price or the market is very well positioned. As you say, there's a lot of new nuclear generation facilities being built across the world,
Hmm.
and there's going to be a lot more demand for uranium. And we've got two resources, I guess. The one is actually because in the past uranium was mined as a byproduct of gold, and in the 80s, when the price collapsed, all of the gold mines stopped producing uranium and just deposited the uranium onto the tailings facilities. So again, we've got 32 million pounds of uranium sitting on a dump or a tailings facility, which is very, very easily extracted at low cost using hydraulic hoses, etc.
Hmm.
And this is exactly what DRD Gold, for instance, does very, very well. So that's an opportunity we look at. We're busy with a feasibility study, and we'll
Hmm.
be busy through into 2025 because that's a real value opportunity. The other one is that our buyers operation in the Free State, which is an underground mine. We recently stopped mining gold from that operation but we
Mhm.
are in discussions with some very interested third parties to see how we can, unlock value from that deposit as well. So we're busy. We've actually appointed an Australian guy who worked with our CEO Neil Froneman in the back when he was starting up Uranium One,
Mhm.
Greg Cochran, who's been appointed to actually focus on unlocking the value in uranium. So we're very excited about that.
Mhm. Super. So would that mean by 2026 that you maybe start a uranium production?
Listen, we're not sure exactly how it's going to happen. I mean, we'd have to build quite a large uranium plant in a high volume because, as I said, it's on a surface tailings facility. And, depending on the outcome of the feasibility and the opportunities, we may develop it ourselves, develop it with partners, or spin it out. We haven't
Mhm.
yet decided on that. But definitely with the outlook very positive, we think that there's going to be quite a lot of value that we'll realize from this.
Mhm. Okay, super. So last but not least, finally, you think the worst is behind Sibanye now?
Listen, it's hard to say. I mean, if the US goes into a hard landing, which we
Mhm.
don't believe it will, and I think more people are saying that it's probably going to be a soft landing.
Mhm.
China's also going through a bit of a difficult period, and then there's all this uh, political turmoil globally, which is causing uncertainty. But on the whole, I think we at the bottom of the price cycle, particularly for PGMs. Lithium's in oversupply, but we don't believe that that
Mhm.
will continue for more than 2 years.
Mhm.
So we believe we're in a very good position. We've spent the last 12 months or 18 to 12 months repositioning our operations for sustainability, for minimal cash outflow, even at lower PGM prices. But we can take further steps, and we've got a very, very solid balance sheet. So we're in a very, very solid position. Even if prices stay there longer, but if we do see a turn in prices, which is what we believe will happen, we've also in a very strong position to benefit from rising prices and also potentially do some very smart deals at the bottom of the cycle when you normally get able to create the most value.
Mhm. Absolutely. So 2027, we can look forward for a dividend.
Well, hopefully earlier than that. I'm a
That would
shareholder
be
too.
great.
Yeah,
Yeah,
no,
exactly.
we our dividend policy is intact. We just had negative normalized earnings this half.
Mhm.
Looking into 2025, I mean, there's a chance we'll pay a dividend if we have positive normalized earnings, and I think from what we've seen from our restructuring, if prices don't go down further, there's a very good chance that we'll be profitable, yeah, and be able to pay a dividend.
Definitely. Super. Then let's hope for it. Let's hope that platinum palladium prices will rise again. I think also there's a good chance for it. Thanks a lot for this half an hour, James, and wish you all the best and hope to see you soon.
Thank you very much.
Thank you very much. Yeah, ladies and gentlemen, that was James Wellsted, the Executive Vice President, Investor Relations and Corporate Affairs from Sibanye-Stillwater. And yeah, you heard it, hopefully, and I'm pretty sure the worst is really behind the company. I mean, they did last year $2.6 billion of impairment charges. This year already 407 million US dollars impairment charge. And I think now everything is on a real fair value. Also, palladium, platinum prices have bottomed out and have slowly restarted to rise. I think the company is perfectly set up for the future. They are in the lithium business soon. They are in the recycling business, auto catalysts, but also you heard it with Reldam. They do any kind of recycling here. They have gold in South Africa. They hopefully will start soon with uranium out of South Africa. They have New Century in Australia with the zinc tailings. They have the DRD possibilities. And yeah, also Sandouville. I think that's the right stuff really to turn the factory here, or the not factory, refinery here to the PCAM. And honestly, I think the company is perfectly set up. And yeah, as James alluded to, they had some difficult years, which were not only their fault, of course. It was the market, it was the unions, it was storm in the US, etc. But still, the company is in fantastic shape, in good shape. They have managed to keep their balance sheet very healthy. And I think at those price levels, this is a fantastic investment. I'm in it, to be honest. And also have a good feeling that latest by 2027, we will get the dividend back. And so from that perspective, make sure that you have a very, very close look on Sibanye-Stillwater. At those price levels, it makes really sense. It's a great entry point. So thanks for watching us, and bye-bye from Switzerland.